Hello students, we'll see the next problem under the process costing. See the page number 35 and question number 32. In a chemical factory, the product passes through three processes. The production of each process is passed on to the next process immediately on completion. The following information is available for the month of January 2002. Particulars, materials, wages, factory overhead is given. Production of each process, production output of each 18,000, 18,750 and 24,000, and opening stock, closing stock. The finished stock obtained at the end of rolling process is sold at a profit of 20% of selling price. Selling and distribution expenses for the month was rupees 20,000. The selling and distribution total is given in the problem, and the basis for distribution is not given, so you should assume it's not going to distribute under the each processes, only under the finished goods account or warehouse account. Under that you enter the full amount. Okay, prepare process accounts and show the profit made during the month. Profits made during the month means you have to prepare the finished stock account. Okay, after the three processes account you have to prepare the finished stock account or finished goods account. In finished goods you have to show the profit or loss. See, first one will start with the first blast furnace account. Under the first account, blast furnace account, process account, see, first two materials 18,400 and the units introduced how much? 18,000. Here there is no loss, is not, wastage is not given. If there is a wastage under the processing, you have to add, right? Like some previous problems, right? There is no wastage is given, so you have to think input is equal to the output. Say, see here, input is equal to output units. 18,000 input, 18,400 wages as it is, factory overhead as it is. There is no any changes, so there is no any other things under the first process, so transfer to the open earth process. Okay, transfer to the open earth process. Under the open earth process account, first write the opening stock. See, the opening stock is how much? 2,000. You just write the this one first. Okay, 2,000. And the how to write the amount? There is no amount for the opening. So see, the open earth process account transferred, right? How much is the per unit here? Per unit is here 2.8, right? So same per unit you have to take for the opening stock. So 5,600. Then opening stock, after that you have to transfer from the first process, that is to blast furnace account, how much? 18,000, 50,400, 2.8. Then next, right, material total. Now how much is the units? 18,000 plus 2,000, 20,000. To materials, to wages, to factory overhead as it is. Okay, next by closing stock is there under this. How much closing stock? See, closing stock is 500 units, 500, and the per unit same you have to take as the opening stock. Opening stock 2.8, so closing stock also 2.8. Then now you have to find out, write the output. Output is given, right? How much is the output of the process B? 18,700. So by rolling mill account, transferring to the rolling mill, right? Last by rolling mill 18,750. Okay, now then write the by law, then difference is the loss in weight. Loss in weight, this is the difference. This is the difference, 750. Now you just see the differences and write the amount. Okay, next rolling mill account. Under this also transfer opening stock, right? Then open a transfer from the previous process, material, wages, factory. Then write the closing stock. Then write the finished goods account. It's there how much? 24,000. And write the loss in weight, right? Then difference is debits column, add, then deduct this closing stock, and difference is the finished goods amount, and then transfer to the finished goods account. Under the finished goods account, the last one is the finished goods account. Under the finished goods account, transfer from the rolling mill process account, write the amount. Then selling and distribution expenses not allocated in any processes, you just write that amount. Okay, next there is a sale, right? 20% on selling price. 20% on selling price means you have to convert how much percentage for the cost. This is the cost price, right? How much percent for cost is nothing but 20 divided by 80 into 100. 25% on cost. So 25% on cost is nothing but 2,92,800 plus 20,000, 3,12,800 into 25% means 78,200. You just add all the things and transfer to the, this is the sales amount. Okay, this is sales is already is there, right? Okay, this is the sales. This is about the finished goods account. And next problem we'll see. Before that, I will give some homework. See page number page number page number 33, question number 27, and page number 35 and question number 31, and page number 36, question number 36. Page number 33, question number 27, page number 35, question number 31, and page number 36 and question number 36. These are the homeworks problems. Okay, there's in these problems there is no any new adjustment. Okay, just you refer the previous problems and just work out it. Okay, next we'll see the one more problem under this. That is the, see the page number 37 and question number 38. Page number 37 and question number 38. See the problem. In a chemical factory, the product passes through 3 manufacturing processes, that is P1, P2, P3. The following details are extracted from the costing records of the company for the month of February 2005. 2000 units were issued to process P1 at rupees 40 per unit. This is for the process 1. Wages, factory overhead, direct expenses, sundry expenses, cost of mixing, scrap sold, sale of waste, output units. 240 units of output of process P1 was transferred to finished stock stores. Output of process P3 is sold at rupees 120 per unit. Prepare process accounts and show the profit for February. Profit for February means nothing but you have to prepare the finished stock goods account after the 3 processes. Okay, start P1. First, materials. How much? 2000 units of materials, is 40 per unit over. Then wages, then factory overhead, then sundry expenses, then direct expenses. Enter all these things. Then cost of mixing is not there for the process 1. Scrap sold is there for the, so by bank account. Sale of scrap, how much? Only the amount is given, so 1500. Next one, sale of waste units 600, amount 34,800 over. Next, now you have to find out the finished stock is given. See, by first you write the finished stock. How much finished stock amount? 240 units of output of process P1 was transferred to the finished stock. Okay, now 240 total output is how much? See the problem, 1200. In that 1200 minus 240 transferred to the finished stock. So finished stock 240, and remaining is how much? 1200 minus 240 means 960. 960 for what? Next process. Total output is 1200. In that 240 transferred to the finished means remaining is transferred to the next process. Next process 960. Then difference is how much? Loss in weight is how much? 200 is loss in weight. Now unit column is over. Now we have to find out the amount column, right? Under this, say by P2 account, under this, say 72,000 is the amount for 1200. Say you just add all these column, you getting the 1,08,300. In that amount 1,500 you deduct and 34,800 you deduct, then you are getting the 72,000. For loss in weight there is no amount for the loss in weight, only the weight. 72,000 for how many units? 1200. Total units 1200 including finished stock and P2 1200. Now for how much? For 960. Then you are getting the 57,600 and remaining is for the finished stock. Okay, don't get confused. Next P2, same P1, wages, factory overhead, direct expenses, sundry expenses. Then my bank account, sales is there 80 units. Then P3 850 output. 850 out as it is, loss in weight 30. Next P3 account, PT account, wages, factory or direct expense, sundry expenses, and one more cost of mixing is there. You have to enter under the cost of mixing only for the P3. Then you write the finished goods account 840 and loss in weight is how much? 10. Next, now prepare the finished goods account. Under the finished goods account, finished goods transferred under output of process A1 and output of process P3 transferred to the finished good. P1 and P3 transferred. And one more thing is there, C, output of process 3 sold at 120 per unit, right? So by bank account, output of process 3 840 sold for 120. So how much? 1,800,000. Then remaining output of process 3 balance carry forward for the next year. So by balance carried down, how much? 240, same 240, 240, 14,460. And the difference you have to consider as the two costing profit and loss account. This is the balancing figure. How much? 16,800. Then balance brought down of the P1. Okay, this is about the problem of 37, page number 37, question number 38. Okay, these are the main important problems under the process costing. If you go through with, I already explained all the important problems and main problems under the process costing. If you go through with all other problems which are given in your question bank, if you have any doubt in any problems, you can ask with me. And under the process costing, one more topic is there, inter-process transferring. Okay, we'll see the theory part and some problems under the particular topic in the next class. Okay, yeah, this is the last problem under the process costing, but under the process costing only one more topic is there is inter-process transfer. We see it is a small topic. We'll see the meaning, features, and we'll see the one or two problems under that particular topic. Okay, this is about the process costing problems. Go through with all the problems. If you have any doubts or difficulties or you need any queries, you can ask with me. Okay, thank you.